Welcome back, guys, to another Zero DTE video, and today Coach Ernie is going to be talking about trading indicators, so make sure you stay tuned. If you're interested in becoming a pro trader, check out the link in the description to find Coach Ernie's Skool Community. Enjoy, guys. Enjoy.
How do you know where to start on that triangle?
I just eyeball it. Doesn't that look like it encapsulates the whole thing?
It does. I just didn't know where to start it, though.
So you think
But
that there's some sort of special technique or magic or something? I'm just eyeballing it. And there are certain patterns that appear out there, and there's libraries showing you what those patterns are. And it's your interpretation. And if it fits nicely with that, maybe somebody else could see something different. Maybe someone else sees a bigger ascending wedge or something. I don't know, or a pennant. It depends on the individual. But this to me looks like a standard ascending triangle. And when I go to Bukowski's site, and then he'll have drawings. Now his looks more like a wedge than a triangle, but here's a triangle right there. It looks like it, right? If I were to just do a general Google search on that and see what other people think it should look like, and then look up images. I mean, fairly close consensus. There seems to be a consensus there, what it looks like. Would you agree?
looks like it, yeah.
Yeah, everybody has a different thing. So there's some percentage of the time that it's going to break out to the top, which is usually a little higher than the breakdowns, but it can also break down. So I'm just projecting, but I've also said that it could do this too. The point here is that this is a very typical pattern where things start to coil up. They coil and then come to some conclusion. A very typical pattern in the market. You see it all the time. And that appears to be what's happening here. It's the range of movement is getting smaller and smaller until some point it's got to say, am I going up? Or am I going down? That's like the nature of volatility. It compresses and gets lower and lower and lower, getting to the singularity until there's no more energy, and then it explodes.
Thank you for the clarification.
In literature, we call it the calm before the storm. So that's what the BK squeeze is all about too. It's about looking for those periods where you have the calm before the storm. The Bollinger-Keltner squeeze. Some of you may have heard of it before or heard of simpler trading, and John Carter called it the TTM squeeze, which he just ripped it off, basically. That's another indicator that is attempts to show that. So let's see. I don't know if they have a BK squeeze here. In here. He doesn't show the actual things that make it up. All right. What this is trying to show is this is a linear regression slope, the oscillator that you see underneath. It's going up and down. And that's essentially showing you the levels of volatility or momentum, the direction of price. And then along the zero line is another indicator that's really hard to see. But it looks like what he's done is he's created another oscillator on top that kind of tells you where that momentum thing is. And every time it comes to near the zero line, it's called a squeeze. And then right after the squeeze, that's where volatility is coming down and getting lower and lower. So for instance, you can see that that points to, here's a point right there. And here's another one. It's hard to see them there. They're all over the place. Wherever it comes down to zero and you see that red mark right here. And what it's saying is that volatility is slowly coming to a crux, and then it's going to explode either up or down. Doesn't know which way. In this case, it exploded down. Here it's coming, and volatility is coming to a squeeze, and then it explodes up. And here's one where it comes to a squeeze and explodes up. That's what they're trying to show. So the BK squeeze is actually kind of a neat indicator. The way it works, the way they get that explosion and contraction of volatility is they use two indicators. They use a Bollinger Bands and a Keltner channel. All right. And the way the squeeze works, that line that's at the zero line, it's looking for the Keltner channel when it's inside the Bollinger Band. And I know that it's really hard to see it here. So I'm going to redraw the Bollinger Band so it's easier to see. I'm going to make its upper and lower a single color, like yellow and thick. And all right, there's my Bollinger. And then the Keltner channel, I'm going to make it a different color. I'm going to make its upper and lower red. Maybe I'll make it a little thicker so it's easy to see. All right, so the way this works, where you get a squeeze is when the Bollinger Band, when both bands go inside the Keltner channel. Here's an example right here, right there. Here's another example right here. Here's another one right here. I mean, there is one right here too, technically. All right. So whenever a squeeze is coming there, you're expecting to see an explosion of price either up or down after that. That's the idea. As you can see, it doesn't really work that well, but a lot of people have staked their whole reputation on it because they're idiots. Actually, they're not idiots. They got people to believe that this is a monumental achievement in human trading history, and that they can be predictive and make millions of dollars and eventually get Lambos and hoes. Just follow the Keltner squeeze, the BK squeeze. Even has a good name.
Thank you, Coach. That was helpful. I've figured that out in the past, and that was very clear.
It's all bullshit, just so you know. So, yep, that's the BK squeeze.
Thanks for watching, guys. I hope you enjoyed the video, and if you did, make sure you hit the subscribe button and the like button below. If you're interested in becoming a pro trader, remember to check out the link in the description for Ernie's Skool Community.